Let's be honest, it feels like every conversation, every single headline is all about the AI revolution. But, behind all that hype, some of the sharpest, most seasoned investors are getting this real sense of unease, a feeling that we might have seen this exact movie before. And this quote, which has been tied to Warren Buffett, just nails that tension perfectly. We're constantly being told that this time is different, that AI changes everything. But for anyone who was around for the dot-com crash, the echoes are starting to get just dangerously loud. And here's why. To really get your head around the sheer scale of what's happening, just look at this number, $5 trillion. That's the market cap Nvidia hit not too long ago. That's a figure bigger than the entire economy of almost every single country on Earth, except for the US and China. All of that for a company that makes computer chips. And where's all that money coming from? Well, in just 1 year, the biggest names in tech, we're talking Microsoft, Amazon, Google, Meta, they are spending a combined $400 billion on AI infrastructure. This isn't just an investment, folks. It's a frantic, all-out arms race to build whatever comes next. But an arms race of this size, well, it doesn't just create winners. It also creates casualties. And that brings us to the very real, the very human cost of this AI gold rush. The intensity here is just staggering. Venture capital, the money that fuels all the new startups, is flooding into AI like nothing we have ever seen before. A full 64% of all VC funding is now aimed at AI companies. Now, just to put that in perspective, at the absolute craziest peak of the dot-com era, internet startups only took up about 25% of that money. The bet today is so much more concentrated. But here's the bizarre paradox that is just so hard to square. At the very same moment that these companies are betting hundreds of billions of dollars on an AI-powered future, they are also laying off tens of thousands of skilled white-collar workers. Amazon, Paramount, UPS, the list just keeps growing. So what is really going on here? This comment from a user on Reddit really gets to the heart of the skepticism on the ground. While the CEOs are up on stage talking about revolutionizing work, a lot of employees see a much, much simpler motive. They see AI as the perfect excuse to downsize, to cut costs, and to pile an impossible amount of work onto the people who are left. And it's this massive disconnect between the corporate story and what people are actually experiencing that's giving so many of us that feeling of déjà vu. Are we really watching a true revolution unfold, or is this just the dot-com bubble all dressed up for the 21st century? The parallels are pretty striking. Look at the NASDAQ in the late 90s. It shot up 582% in just 5 years, and then it crashed, wiping out $5 trillion in value. But here's the part people forget. It took 15 long years for investors who bought at the peak just to get their money back. An entire generation of investors learned the hard way that hype is not the same thing as value. And the language, the rhetoric, it's almost identical. Back in 1999, the mantra was, "This time is different because the internet changes everything." Fast forward to today, and you have OpenAI's Sam Altman saying, "AI is the most important thing to happen in a very long time." See, it's the exact same justification for ignoring the old rules of economics. The tech is just too revolutionary this time. And if you want a real cautionary tale, just look at Cisco. Cisco was the Nvidia of its day, the essential picks and shovels company for the internet revolution. It was real, it was profitable, it was dominant. At its peak, it was the most valuable company in the world. And yet here we are, 25 years later, and its stock has still never gotten back to that high. Kind of puts a massive question mark over Nvidia's future, doesn't it? And that huge question mark leads us to what might be the most troubling part of this whole story. The very strange, very self-contained way this boom seems to be financed. Some analysts have compared it to an extension cord that's just plugged right back into itself. The idea is called circular financing, and in simple terms, it works like this. Big tech invests billions of dollars into an AI startup. That startup then turns right around and spends those billions on cloud services and chips from, you guessed it, the very same companies that just invested in them. It creates this perfect little loop where money goes around and around, and everyone's value gets inflated.
but it's really not clear how much new outside money is actually coming into the system. So here's that loop in action. First, you have Microsoft and Nvidia pouring over $100 billion into OpenAI. Then OpenAI commits a jaw-dropping $300 billion to Oracle for cloud services. And finally, Oracle and OpenAI use that capital to buy billions and billions of dollars in Nvidia chips. The result? Everyone's revenue goes up, their stock price goes up. It looks like this insane explosive growth, but so much of it is just happening in this weird closed system. And a closed system like this, well, it has very real, very tangible consequences. Beyond all the financial wizardry and the stock market frenzy, this rise has enormous hidden costs for our wallets, for our infrastructure, and yeah, for our planet. Okay, this right here is the critical point, this enormous gap. Big tech has invested something like $560 billion in AI infrastructure, but the combined revenue they've actually generated from that AI, about $35 billion. That means for every single dollar they are earning, they're spending 16. That is just, it's fundamentally unsustainable. And what are they actually getting for all that money? Well, according to a recent MIT study, this is the percentage of corporate AI pilot projects that failed to produce any meaningful results. 95%. Think about that. It really begs the question, are we watching the most inefficient gold rush in human history? And the impact is hitting all of us. This insane demand for hardware is creating global shortages. If you're a business, you could be waiting 2 years for enterprise hard drives. The price of basic computer memory has doubled. Nvidia itself has basically shifted its whole focus from making GPUs for gamers to making these $40,000 AI chips for the giant cloud companies, which ends up squeezing everybody else out. And then there's the biggest bottleneck of all. Power. The data centers that are planned for AI will need a mind-boggling amount of electricity, as much as 23 nuclear power plants worth. As Microsoft's own CEO recently admitted, the limit on AI growth isn't chips anymore. It's a global lack of actual power to run them. So, with a bottleneck as fundamental as energy itself, how are we supposed to make sense of all this? Is it a real revolution, or is it a bubble that's headed for a very painful reckoning? Well, let's wrap this up with a framework that might help us separate the hype from the reality. It's called the AI butterfly theory, and it suggests that AI evolves through 4 pretty distinct stages. First, you have the egg, that's the raw ideas, the research. Then comes the caterpillar, that's the foundational building, the data training. After that is the chrysalis, which is where AI gets refined to create real business value. And finally, you get the butterfly, the beautiful generative AI that we can all see and play with. And the core argument of this theory is that we're all mesmerized by the butterfly, asking ChatGPT to write a poem or make a picture. But the true long-term profitable value, that's actually being built in that less glamorous but way more important chrysalis stage. This is the boring stuff, like an AI that can predict supply chain problems and save a company millions of dollars. One is flashy, the other actually creates real, measurable value. And that leaves us with the big final question. When we're looking at $5 trillion valuations and these 16-to-1 spending ratios, is the market truly betting on the foundational long-term value of that chrysalis? Or is it just chasing a beautiful, captivating, and maybe very fragile butterfly?